Welcome to Crypto Game, where people like you come to hear the truth about the current financial economy and how to benefit from it. In today's topic, we have billionaire businessman and investor Warren Buffett giving his advice on how to become rich during the recession. Stay tuned because later in this video, we give you 2 cryptocurrencies that show current constant growth that you may want to invest in while they're still cheap. Warren Buffett is arguably the world's greatest investor with a net worth around $100 billion, making him the world's 7th wealthiest person. In a recent interview, Warren Buffett discusses his thoughts on cryptocurrency, the recession, and inflation, given the fact that inflation rates are at a 40-year high of 9.1%.
I shouldn't answer any questions on the subject, but I will. There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short, and nobody wants their windpipe stepped on. I don't blame them. I don't like people who step on my windpipe. I would say this: if the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, it's just bargain price, $25 billion. I'll write you a check this afternoon. $25 billion. Now I own 1% of the farmland. If you tell me you own 1% of the apartment houses in the United States, and you offer a 1% interest, so I'll have a 1% interest in all the apartment houses in the country, and you want another $25 billion or something, I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world, and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was 15 years ago. If I got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin from you? I mean, why don't you call it Buffett coin? Make your own or something. Do something. But I'm not going to give you anything for it. And you'd be right, incidentally. But that explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got.
So the big question of this video is, where is the best place to put your money during times of inflation and a recession? We'll be listing the professional advice of Warren Buffett and breaking down his strategy so that you can use it to your advantage. The way Warren Buffett invests is he has to know the past to determine the future. Warren remains attracted to apartment housing because he knows it's a guarantee that there will be renters. Warren also likes farmland because he knows it'll produce crops. It was a bold statement to say if someone offered him Bitcoin and all the Bitcoin in the world, that he wouldn't buy it for $25. To his point of productive assets versus selling something to someone for more than what you bought it for, there is no consistency in Warren's eyes of what will happen to cryptocurrency after it's purchased. Bitcoin at this moment is a coin you buy to hopefully sell it later at more than what you purchased it for. Warren next discusses his opinion of gold.
Gold would be way down on my list as a store of value. I mean, I would much prefer owning 100 acres of land here in Nebraska, or an apartment house, or an index fund. Gold, we'll say, was freed up 30 odd years ago, but it adjusted to a market that still, if you go back to 1900, you were talking $20 gold. Well, you take 20 to 400 in 100 years, the Dow went from 60 to 12 or 13,000, and then 12,000 or whatever it might have been in that same period, and paid you dividends during the time you owned it. It was 66, I think, at the start of the century, and I forget what it ended, but it's 11 or 12,000. And like I say, it was paying you something every quarter during that period. And if you own gold, you pay $20 in 1900 or thereabouts, and then we'll say you had it $400 100 years later. And in the meantime, you paid insurance and perhaps some storage cost. It really is not a store of value, and I'm not arguing for paper money, but if you're worried about paper money, and I think it makes a lot of sense to worry about paper money over long periods of time, but it's just about, it's just about the last thing I would want to own under those circumstances.
Gold is way down on Warren's list as a store value. He doesn't like the history of gold in terms of the way the market has controlled its value. In the early 1900s, gold was worth $20. Fast forward 100 years later, it was $400. Comparing this to the Dow Jones, you would have earned $12,000 in the same time period. This brings us to our bonus tip and what we recommend you should consider as a good cryptocurrency investment. One crypto token that shows a current constant upward trajectory at this moment is UMA, also known as Universal Market Access. It was launched in December 2018. UMA is a protocol for the creation of synthetic assets based on the etherium blockchain. UMA allows any user to create, run, and trade digitized derivatives from anywhere in the world. Currently, this crypto coin is up by 26.38%. It was at an all-time high of $19.06 in November 2021, and currently sits at $3.91 per coin with a constant upward curve. You can invest in this crypto coin tax-free by using the IRA loophole. Follow the link in the description below to learn how. Stay tuned for the next investment coin later in this video. Subscribe now because in each video, we give you crypto coins we've researched so you don't have to. Next, Warren Buffett touches on the topic of real estate and if it's an asset or a commodity.
The alternative, in my view, certainly commodities can be an alternative, but the alternative is income-producing assets of one sort or another that are not fixed dollar type. That might very well extend to rental real estate. It might extend to farms. An investment, you're looking for something where you put out money now and that asset that you buy gives you back more money over time. Now, the problem with commodities is that you're betting on what somebody else will pay for them in 6 months. The commodity itself isn't going to do anything for you. So there's two types of assets to buy. One is where the asset itself delivers a return to you, such as rental property, stocks, a farm. And then there's assets that you buy where you hope somebody else pays you more later on, but the asset itself doesn't produce anything. And those are two different games. I regard the second game as speculation. Now, there's nothing immoral or illegal or fattening about speculation, but it is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. I bought a farm 30 years ago, not far from here. I've never had a quote on it since. What I do is I look at what it produces every year, and it produces a very satisfactory amount relative to what I paid for it.
Next, Warren gives his take on short-term versus long-term bonds. Bonds, by definition, is a loan to a company or government that pays investors a fixed rate of return over a specific time period. Bonds are a key ingredient in a balanced investment portfolio.
I don't like fixed dollar investments at all. I don't like short-term bonds. I don't like long-term bonds. We own a lot of short-term bonds, but that is not because we like them. That's just a parking place. But
The one thing we know is we think that long-term bonds are a terrible investment, and we, at current rates or anything close to current rates, so basically all of our money that is waiting to be placed is in treasury bills that I think have an average maturity of 4 months or something like that at most.
As we learn, Warren is not a fan of bonds. But next we get to hear where Warren Buffett keeps the vast majority of his money during times of inflation and recession.
On this March 11th, in a couple of weeks, it'll be 77 years since I bought my first stock. And I paid $114.75 for 3 shares of City Service Preferred. But if you'd been a pension fund and you put $1 million into the S&P 500 at that time and reinvested it, during my investing lifetime, that million would have turned into $5.3 billion. You would have gotten, for every dollar you put in, you've gotten over $5,000 without ever reading a headline, an annual report. You didn't have to know accounting. You just had to believe in America. And you didn't have to pick the right stock. You just picked America. And I go back and I point out that there were 2 77-year periods before that, and that takes us back to George Washington getting inaugurated.
And there wasn't anything here then. And now you have $108 trillion of household wealth in the United States. You know, we've got something that works. And that framework wasn't that we were working harder, it wasn't that we were smarter, but we had a framework that unleashed human potential. And just think of that, 3 77-year periods, one of which I experienced. And you couldn't help, but all you had to do was believe in America.
That worked the last 77 years, but there's a question that came in, T29. This is from Scott Baker. With so many people in the S&P index funds, is it still market neutral and the best investment vehicle for most people?
Yeah, I think it's the best investment because most people don't know how to pick stocks, and most of the time I don't know how to pick stocks. I mean, it's not an easy game, and by definition, people are going to do average. I mean, take everybody in aggregate, and if half of them are paying big fees and jumping around and paying brokerage commissions, the other half have to do better.
This brings us to our next bonus tip and what we recommend you should consider as a good cryptocurrency investment. Another crypto token that shows a constant upward trajectory at this moment is Solana. Launched in March 2020, Solana is a highly functional open source project that banks on a blockchain permissionless nature to provide decentralized finance solutions. It aims to improve scalability by introducing a proof of history consensus, combined with the underlying proof of stake consensus of the blockchain. Currently, this crypto coin is up by 5.3%. It was at an all-time high of $259.95 in November 2021, and currently sits at $46.64 per coin with a constant upward curve. You can also invest in this crypto coin tax-free by using an IRA loophole. Follow the link in the description to learn how. Subscribe now because in each video, we give you crypto coins we've researched so you don't have to. In today's interview, Warren Buffett gave us his personal outlook on what he feels are safe investments to get rich during a recession and inflation. We'll see you on the next episode.